Hello, my name is Steve Lauck. I'm President and CEO and one of the Senior Portfolio Managers at Ashfield Capital Partners. I'd like to tell you first about how we manage money at Ashfield, and then spend most of the time talking about how our portfolio is positioned and what our outlook is for the year 2010 and beyond. The thing to remember about Ashfield is actually quite easy to remember. We're all about team, themes, and few extremes. That's the way we invest. It's a team of 6 seasoned professionals that have worked together a long time through all sorts of market conditions, making investment decisions for their clients. The themes we analyze and put in our portfolios represent long-term trends that we see globe today that allow us to invest around, take advantage of, and frankly get the wind at our back when we invest. The few extremes part is controlling volatility of the portfolios. We have certain risk disciplines we put into place, we've used for many, many years, that allow us to take the right amount of risk for our clients, but not excessive risk. The last thing you want to do, and it happens all the time unfortunately, as we say, you do not want to bet the farm, because if you bet the farm, you will ultimately lose the farm. These risk controls we have in place allow us to, again, earn the returns that are necessary to satisfy our clients' long-term objectives. At the same time, not blowing up the portfolios, very critical. So remember, our approach is all about team, themes, and few extremes. The world is recovering from the deepest downturn we've seen since the Great Depression. I know it's been scary for many investors, but what has happened is, because of this deep downturn, corporations have gotten themselves extremely lean and extremely leveraged to even a slight upturn to produce very strong profits. Some have questioned, why is this market going up? Why is the market up so much in the last 12 months? It's precisely this: profit growth. Profits are accelerating, and now we're seeing this phase of the economy that we're entering, where we're going to see more profit growth driven by end demand. And end demand is growing. Corporations are starting to build inventories to meet this demand, and profits are rising. This is the tonic for up stock markets. We see many opportunities. I know you see the news at night and you think, my, it's a gloomy world out there. You talk to companies, you talk to CEOs, you talk to those that are involved in businesses on a global basis. Their business is improving and it's accelerating. That's why stocks go up. We like many areas. Technology, and many areas of technology that have been put on hold for a couple of years. New orders are starting to build, pick up. We like other areas in the marketplace. Global industrials are a very favorite of ours. These are companies involved in all sorts of areas, but basically building out the global infrastructure. We like selected consumer companies, even in this country, that again are enjoying good profit growth. So we like to say that we're in an environment, and I know the word new normal has been thrown out there, which is a fairly pessimistic outlook. We'd prefer to call it the new mix. There are certain industries that clearly are not participating. We realize unemployment still remains stubbornly high. Housing is kind of limping along, but there are many of these other areas, I just mentioned a few, where you're seeing expanding profits, dramatic profit growth, and rising stock prices. We advise our investors that this is the time to invest in stocks, precisely the time to invest in stocks, and you should be taking advantage of some of these growth opportunities in the next couple of years. Thank you.